So good morning guys. I hope you're able to hear me properly. Am I audible to you? So Shubham, you are a little late in reading your comment. It is not due to Corona. There was some technical error. That is why we are a few minutes late. Okay. So let's not waste any time and begin with today's session. So good morning to every one of you. Guys, as you know, I am Mansi Anand, your mentor for RBI Grade B examination, and I hope your morning is very good. So, as you all know, in these sessions, we talk about different questions, and with the help of those questions, we discuss a few concepts which can be helpful to you if you are preparing for competitive exams and especially RBI Grade B exam. So guys, let's not waste any time today and move straight away to the first question, right? So don't forget to subscribe to our channel anujindal.in and don't forget to press this bell icon which can help you to stay updated with a lot of current news regarding different competitive exams. So guys, here is your question number 1 for the day. It was already up as most of you know, but still let's again start with this. The first question says, what step has been taken by Government of India to correct the inverted duty structure in the smartphone industry? So here this question talks about a step that Indian government has taken to correct some sort of anomaly in the Indian smartphone industry. And what is that problem? That problem is inverted duty structure. And in which industry? The smartphone industry. So I'll give you a few seconds to interpret the options and then you can start answering the question. So answers have already started to pop up. Samuel says A, Neelam says A, Gaurav, Shubham, Rahul and all of you say A. So I think we are starting a very good morning as most of you, or I should say all of you are answering correctly because the correct option is option A. So GST on smartphones was increased to 12. GST on smartphones earlier it was 12%, while on the phone components, the parts which are used for making cell phones, on them GST was 18%. But now what has happened? Government has increased the GST applicable on smartphones to 18% from 12%. So there has been a 6% hike, right? And the government is saying that why has it done so? To correct the inverted duty structure. So guys, are we all familiar that what is an inverted duty structure in case of GST? So now let's talk about inverted duty structure, right? So what is an inverted duty structure? As its name says, inverted or inverted refers to someone which has its upside down, right? So here in the case of inverted duty structure, what happens is the GST or the tax rates applicable on on components of the product is higher than the tax applicable on the final product. As you can see here, the rate of tax on inputs purchased. What are the inputs? The components or the raw material. So the GST or the tax on inputs purchased, that is GST paid on input receipt, is more than the rate of tax, that is GST rate payable on outward supplies. So this inverted tax structure, it poses a sort of problem for the government. And what is this problem? This problem can be tax evasion. So let's first understand that how does this inverted duty structure works, right? So let's say there is a product, let's say there is a manufacturer. So this manufacturer, Mr. A, he runs a factory and that factory produces jeans. So we all wear jeans, but how does it get created or how does it get produced? With the help of raw cloth, right? So he purchases cloth from the market at rupees 1000, and on this rupee thousands he pays a 10% GST, right? So now how much GST is he paying? 10% of rupees 1000, that is 100. So while he purchases this raw material, this cloth, he is paying rupees 100 as GST, as tax to the seller from whom he is buying this raw material, right? So he has already paid rupees 100 as tax. You can see here, right? Now what happens is he uses this cloth to produce a denim or a jeans, the final product, and on this final product, let's say the GST rate is 5%. So the cost of this jeans is 1500, right? He is selling this jeans for 1500, and on that 1500 the GST or the tax rate applicable is 5%, right? So now how much GST is he charging from his customers or to the people to whom he is selling this final product? He is charging 5% of 15%, right? So how much is that amount? 5% of 1500 is 75, right? So now you can see he is liable to pay rupees 75 to the government, but he has already paid rupees 100 to the government, right? So he has already paid more than what he should pay to the government for the amount which he is liable. He has already paid more than that amount. So now he is liable to get a refund from government of the difference, that is rupees 25. 100 minus 75 is 25. So are we clear with this mechanism? So this is known as an inverted duty structure, right? But usually what happens is the tax on inputs is lesser and the tax on final products is higher. That is why a manufacturer has to pay the balance to the government. But in case of inverted duty structure, what happens is the manufacturer is liable to get a refund from government, right? So are we clear till here? So I don't think there are any doubts about inverted duty structure, right? It's not very complex to understand quite a simple mechanism, right? So now how does this inverted duty structure, it leads to a problem for government, or how does it poses as a nuisance for the taxation sector or for government in the tax revenue collection, right? So now as you can see, the seller, the manufacturer, our friend who is producing denim, he is getting a refund from the government. Now it can also be possible that he gets into some sort of greed and he wants a better tax refund from the government, and for that he creates some fake bills. So he tells government that I am purchasing many more inputs on which higher GST I have already paid to you, and now I am liable to get refund. So it can also happen that he is purchasing the components worth 1000 as we saw in the example, but on paper he is showing that he is purchasing the components worth 1100, just so he gets a higher refund, right? Because now as 10% he would have paid 110 according to documents. Guys, do remember this is happening according to the documents, according to the fake bill that he is creating, and this is happening in reality. So now he has a bill for 1100. He is showing false statements to the government that I am purchasing raw materials worth 1100 on which I have already paid 110 as tax at the rate of 10%, and now he is charging 5% on the final product. So he is collecting 75. Now he is liable to get 35 as refund from the government. So can you see that how creating fake bills or by creating fake statements of input, by showing it to government that yes, we are buying highly priced, highly taxed inputs to produce our products, the manufacturers can get a higher tax refund. So this poses as an incentive for them to show fake claims, to show fake input purchases, right? And that is why this leads to the tax evasion, right? So this tax evasion due to inverted duty structure is one of the problems in front of government, as it is leading to tax evasion and in many states it is leading to lower tax collections, right? So if you remember, in yesterday's session we discussed that how the revenue for states is falling after GST implementation. So this tax evasion due to inverted duty structure is also one of the reasons that why the tax collections for the states are falling, right? So this is what inverted duty structure is all about. So you can see, can claim tax refund from the government, the assessee can claim it, and as it has already paid more tax than it is liable to pay while purchasing highly taxed inputs. So I hope we are clear with this question, right? So there is one more thing that I would like to discuss here, that the smartphone industry is not very happy with this decision, because obviously if the GST on smartphones is going to be raised, then the price of smartphones is also going to be raised in an industry where slowdown is already happening. And due to the COVID-19 outbreak, there is supply disruptions, raw materials and the components are not coming from China. That is why the smartphone industry is already facing some problems. Also, there was a statement by Anuj, who is the head of MI India, that this decision of government is going to add to the problems of the smartphone industry, right? Whereas the government is saying that we want to correct the inverted duty structure. That is why we are bringing the tax rates applicable on final products to equal with the tax rates applicable on inputs, right? Rajat, a tax refund is not exactly same as input tax credit, because input tax credit is the amount that you are going to get reduced. So here, as the manufacturer is already paying 110 as tax, so this is the amount that he is going to get as input tax credit, right? So input tax credit is the amount of deduction that you have already paid that you don't have to pay again, right? But the tax refund is the amount of difference that you're going to get refunded from the government. So I hope your doubt is clear now. So here in this example, you can see that the manufacturer is liable to get an input tax credit of this amount, whereas the refund is this amount, right? So I hope now you're clear with your doubt, Rajat and Samuel. If you are, right. So I think we can move to the next question now. So here is the second question, guys. The second question says, tariffs are detrimental to global value chain related trade. So here a statement is given to you which says something about tariff and something about global value chains. Now you have to tell that which one of the below mentioned options explains this statement properly. Which of these options is going to tell you the meaning of the statement which is mentioned to you in question, right? So I'm going to give you a few seconds so that you can read the question properly, understand it, and then start answering it. Samuel says S. There is no option as S, Samuel. I'm very sorry. So you have to tell from A, B, C, D and E. There is no option as S. So guys, I'm waiting for your answers. Just read the question carefully and then try to apply the concepts into reality, that what is going to happen if there are tariffs levied on many products, and how is it going to affect the international trade, the global value chains. So Gaurav comes up with an answer and he says D. Sumit is saying C. Anivesh is saying D. So guys, let's wait for some more answers. So Palak is not knowing the answer. That is absolutely fine, Palak. After the end of this question, you are going to know the answer. So there are votes for C and D, I think. So many of you are saying D. Guys, just don't hold a possibility in mind. Just try to make the concepts work and try to link one event to another, that what will happen. Don't make assumptions in your mind before the question mentions it. So many of you say D. including Rahul, Samuel, Prabhat and Chandrasekhar. But Sumit is saying C, whereas Swaroop is saying C. So guys, let's see what the correct answer for this question is. The correct answer for this question is option C. So all those of you who answered as C, Sumit and Swaroop, you are absolutely right. And why is this so? Why is C the correct answer? Let's see. So the statement says tariffs are detrimental to the global value chain related trade. So what is global value chain? So a trade in which nations from different, in which different nations are involved. So a trade so what is a value chain? A value chain is a chain of events that allows the raw materials to turn into finished products and the customers to avail the benefit of those finished products, right? So that is a value chain. Now, what is a value chain when global is added to it? So it means a value chain which works in different countries of the world and different nations of the world. As you see, Apple phones are manufactured in China, but the Apple company is based in US, and how the products are transferred to all over the world, right? So especially in case of automobiles and electrical products like computers and laptops, it happens that the components get manufactured in some other countries, mostly the Asian nations, and then they are assembled in some other countries, then they are transferred to the other countries for sale. So you can see how trade works in different countries, and different stages of production takes place in different nations of the world. So I hope we are clear with the meaning of global value chain. It's a very simple term. Most of you would have read it somewhere or else. So now how tariffs affect the global value chain? So what are tariffs? Tariffs are the taxes or the duties which are applied by governments on these products, right? So now we have to connect tariff to global value chains. So guys, what happens when tariffs are applied on many products, on especially the products which are getting manufactured in different parts of the world? So what happens is a compounding effect takes place. So what is a compounding effect? So those of you who have studied finance must be knowing the meaning of compounding effect. So what happens when you deposit ₹1,000 in bank? Let's say you are getting a 10% interest. So at the end of 1 year, you are going to get ₹100 as interest, and your total deposit will become 1,100, right? So now in the next year, what will happen? You will get this 10% interest not on this amount but on this amount. So you are getting an interest on the interest that you have already received. So now you will get 10% of 1,100, that is 110, and your total deposit would be 1210. So this is known as compounding effect, right? So a very simple concept in finance, most of us would be familiar with it. So this is the same thing that happens when tariffs are made applicable in different countries. So because what happens is when one nation raises tariff rates, the products produced there become costlier. So a nation is producing a product, let's say a product is getting produced in India and its cost is ₹1,000, right? And in case of global value chains, when these products, especially the components which experience further value addition in other countries, gets transferred to next stage in another country, there are also some tariffs applicable which again increases the price of the product. So this looks a little complex. Let's try to understand this with the help of an example. So here is a product, let's say a smartphone component. Let's say the battery in a smartphone. This battery is getting produced in India where the tariff applicable is 10%. Now the tariff paid here is 100, right? And the total cost becomes 1,100, right? So now when this product gets transferred to another country, let's say US, where all the components of this cell phone are going to be assembled to make the final product. So here also 10% tariff is applicable, right? So what will happen? US is going to receive a product that is costing it 1100 plus 10% tariff, which makes the total cost 1210, right? But now what happens if this tariff is hiked by a little percentage, let's say 1%. So now this becomes 11%. When it becomes 11% on 1000, the tariff charges 110, right? Now the total cost becomes 1110. And now to US it is transferred. Again there is a 10% tariff applicable, and now this 10% will be applied on this amount, which will again further increase its price, because there is 10 rupee more here. As you can see, earlier there was 1100, now there is 1110 amount. So there is a 10 rupee increment, right? So when there is a 10 rupee increment, 10% of this 10 rupee is also going to get increased, same as the compounding effect. So now what will happen? So 10% of this amount, which is so now 10% of tariff will be applicable on this amount, which will be 1221. So earlier this was the price and now this is the price. So you can see earlier the tariffs applicable were 100 in India and 110 in US, but now it is 110 in US and 111 in 110 in India and 111 in US. So I hope now you can see the compounding effect, that how. So this is only a two-stage production, that product is getting transferred from India to US, and when in case of product where they move 5 or 6 countries, this tariff gets again and again increased again and again, increasing the price of the product. So if a little tariff is increased in one country, the effect goes on to different countries. So now I hope we are clear with the meaning of this product, this question. So you can see here the statement says fragmentation of production across global value chains requires multiple crossings in different nations. Therefore, it amplifies an amplified increase in the rate of protection, that is the tariff. If tariff is hiked even with a small amount, it amplifies. What is the meaning of amplified? It gets bigger and bigger again. So most of you were saying D, that there are chances that tariff levying nation may experience a decrease in exports. So guys, this is only a possibility, right? So it is not necessary if one country is applying tariff that the other country increases the tariff in a retaliatory move. So this is only one of the possibility. That is why we cannot say that D is the correct answer, but this is obviously going to happen, right? So that is why C is the correct answer. I hope we are clear with this question, and now moving on to the next question for the day. So third question says, many companies in China are looking to diversify their operations by adding another location in Asia. This strategy is known as the dash. So you have to tell the name of this strategy, and this strategy is associated with Southeastern nations mostly, and countries like Vietnam, Thailand and Cambodia. So you have to tell which is the correct option. So guys, it's a very simple question. You just have to tell the name of strategy in which a company looks to diversify its operations in different Southeastern nations around China. So Saurabh says D, that is Asian Tigers model, and Samuel also says D. Swaroop comes up with D, whereas Prabhat and Ramesh, they say B, that is moving ahead of China model. So guys, I'm still waiting for the correct answer. Ankur says E, that is China +1 model. So let's wait for a few seconds and allow others to answer as well. So more answers are coming up. Sumit says C, Sanjana says C, Selvi says C, Ashish says A. So guys, I would like to tell you that only one of you has answered correctly till now. So we have got another correct answer. So more people have started answering correctly. So I think we should move to the solution now. The solution is, and the correct answer is option E. That is the China plus one model. So guys, you have to understand the name China plus one. Here we are not talking about the companies uprooting their operations from China and then moving on to different countries. We are talking about the companies remaining in China and simultaneously looking for more options to have the same advantages that it enjoys in China. So this is known as China plus one model, right? To diversify the operations in countries which are similar to China, mostly Southeastern nations like Cambodia, Thailand, and especially Vietnam. So guys, why are companies based in China? Why do companies from Britain or companies from US or from European nations, they move their operations to China? So one of the major benefit that accrues to them in China is low labor cost. So this cheap labor allows them to reduce it allows the companies to reduce their cost of production. But since China has also evolved as a big economy in the past few years, if in the last decade or in last 15 years, we have seen China emerging from an Asian nation which was not considered very well developed by the Western nations. Now it is being considered one of the strongest and most powerful nations in the world, that even US is threatened by its increasing power. Now obviously it has come to a halt with the outbreak of COVID-19, but till now China has been known to grow at a very fast rate in last 15 years. So that is why it has lost some of its competitive advantages, that are low labor cost. So earlier China was a very populous nation with a large population. That is why there were lesser opportunities in employment. So companies were able to avail the benefit of cheap labor. But now as China has applied one child policy and the population is aging, that is why there are more number of retiring workers and less number of able workers or the young workers. So that is why China is gradually losing its competitive advantage. That is why the companies are looking for more nations which can provide them with the same advantage that China was able to provide them few years back. And which countries are they looking to? Countries like Vietnam, Cambodia, Thailand. So why are we discussing this model in India? What implications does it have for our country? So the implication that it does have is India can also look to be this plus one country. So if we are able to invite such companies in India, we'll receive foreign investment and there will be more employment opportunities for our growing young population. India is a country with a huge amount of young population, young people who are looking for work, right? So it is very important that we invite these companies into India, make the regulations easier for them to enter, so that we can also experience the same growth rate as the same growth or the same opportunities that China experienced, right? So I hope there is no doubt about this question. A very simple question indeed. Moving on to the next one. So guys, before moving on to the question number 4, I would like to ask you to join our Telegram group. We have a Telegram group, and on this group we solve the queries of students whoever posts them. So we try to answer your questions as soon as possible. If you have any doubts, you can still mention in the comments, or you can mention it in the live chats, or if there is a topic that you would like us to take up or would like to understand, just tell us by mentioning it in the comments or on the Telegram group or in the live chat, and we'll try to take it up as soon as possible. Now moving ahead to the next question. So this is question number 4, and question number 4 says bills and invoices of MSMEs, that is micro, small and medium enterprises, discounted under the dash are also eligible for the recent CRR exemption or deduction. So this question talks about the recent CRR exemption and some sort of policy or some sort of model, right? So you have to tell the correct answer. So Ramesh Kumar, are you talking about the China +1 model? Yes, it does affect the Indian economy. I just told you that India can also aspire to be this +1 country, so that we have increased amount of employment opportunities and foreign investments. So you guys have started to come up with the answers, and most of you say A is the correct answer. That is trade receivables discounting system. Does anyone else have any other opinion? No, so all of you are saying A and all of you are correct. So I think it's a very simple question. Correct option is option A. So what is TREADS? TREADS is a scheme under which the MSMEs are provided credit. So if they have any, so one of the major problems with these industries, with MSMEs, is to have an ongoing flow of money or an ongoing flow of funds. That is why, to enable it, government is providing, this scheme has been taken up for MSME industries so that they can easily get finance their bills and invoices that they have, which are known as factoring units. So if an MSME is eligible under this scheme, it can get these bills or invoices factored or discounted from the corporates or the banks. So what does this question says? If any bank is funding this sort of scheme or allowing MSMEs to avail the benefit of this scheme, so this scheme, then this is also eligible for the CRR exemption. They can reduce this amount factored under this scheme from the CRR exemption. So guys, we have already discussed CRR exemption, that what is the amount of CRR exemption, why is government providing it, and what are its implications on Indian economy in the previous session. So if you don't know about it, you can refer to that session. In yesterday's session also someone asked about CRR exemption. So guys, if you miss out on anything, you can watch it in previous sessions so that you stay updated with the current news. So this exemption is provided for 5 years, Anivesh. So 5 years or the tenure of the loan which the bank is providing, whichever is minimum, for that duration the exemption is being provided, right? So since most of you know the answer to this question, I don't think we need a lot of discussion here. Moving on to the last question for the day, which says the Reserve Bank of India is proposing to set up an alternative digital retail payments organization. What is the main purpose behind this proposal? So guys, this question has already been discussed somewhere. We have already discussed that government wants to set up an umbrella entity known as NUE, new umbrella entity, to facilitate digital payment structure in India. Now you have to tell that what is the motive of government behind this move. So we have already discussed that what is the motive, and we have discussed about the specifications of NUA, that what should be the minimum worth and minimum paid up capital in case of this. And we have also discussed that this new entity should have an RBI appointed director on the board. So answers have started to pop up. So Ramesh says B, Easter Samuel says A, Khushbu says B. So there are most votes for B, right? Some of you say A, but most of you are saying B. Prabhat comes up with a new answer and he says C. Saurabh says A. So guys, the correct answer to this question is option B. So all those of you who answered as B are absolutely correct, because the correct answer is B. Because the responsibility of managing the digital payments is on NPCI. That is why the government fears that if in any case NPCI goes down or there is any problem with this organization, it is going to take the whole nexus or the whole structure of digital payments with it to the ground. That is why to diversify or to reduce this sort of concentration risk, and a new organization is about to set up, that is known as NUE. So guys, if you want to know about it in detail, you can refer to the previous sections, right? Previous sessions where we have discussed NUA. So guys, these were the 5 questions for today. I hope you learned something new in this session, and if you did, then don't forget to press the like button, do subscribe to our channel, and I hope to see you all in tomorrow's session at the same time. So thank you for watching this video. I hope you have a good day and all the best for your preparations. Prepare well, study well, and stay safe from COVID-19. And now we will meet in tomorrow's session. So thank you for watching.